The case for nuclear power has been around for a long time. It is a baseload energy source which is relatively cheap and emits even less carbon emissions than other sources of renewables such as wind and hydro, not to mention coal and gas. For decades, nuclear has been touted as an important and crucial component of the world's energy supply going forward, particularly as we strive to lower emissions around the globe. In 2011, an earthquake in Japan destroyed multiple nuclear reactors and devastated a local town that many of you may know as Fukushima. This showed the world the dark side of nuclear and changed the widespread trajectory of nuclear power forever. Post-Fukushima, Japan, which was once the global leader in nuclear power generation, switched off all their reactors, which consumed somewhere between 10 and 20% of the world's uranium at the time. Political views on nuclear were shattered and have since led countries such as France and the US to cut down on nuclear power dependence and Germany to shut down all their nukes altogether. After many years of net closures, there is light at the end of the tunnel, with China and other Southeast Asian countries aggressively expanding their nuclear fleet over the next 2 decades as they look to move away from polluting coal-based power stations. Japan have also been slowly restarting their fleet, with strong emphasis on the word slowly. So what does this have to do with uranium? For those that don't know, uranium is the fuel source used in nuclear reactors, and when heated, it causes a chain reaction which generates energy. Uranium is a metal and is dug out of the ground and then traded as a commodity on an exchange. Commodity prices are dictated by the first rule in economics textbooks, supply and demand. When there are more buyers than sellers, prices go up, and when there are more sellers than buyers, well, you get the picture. After Fukushima, demand for uranium plummeted as the nuclear reactors were shut off in Japan and other parts of the world, but the supply kept coming, which caused a supply-demand imbalance, more supply than demand. This forced the price of uranium to enter what we call a bear market, which is when prices fall for an extended period of time. And this was a whopper. Uranium was in a bear market all the way until 2019, having fallen from over $60 per pound to a low of $20. Over the course of the past few years, a couple of very interesting things have happened in the uranium market. Firstly, the price got so low that it was costing more to dig out of the ground than it was selling for, meaning that the miners were losing so much money that many went bankrupt. Secondly, the largest uranium miner in the world, Kazakhstan, which are to uranium what the Saudis are to oil, announced that they would cut their supply by 20% to try to balance the supply-demand of the industry and get prices back up. Thirdly, a large Canadian miner called Cameco decided to temporarily shut down one of their mines in Saskatoon, Saskatchewan, which was the second biggest in the world, following the Kazakhs' lead to try to tighten up the market. But none of this worked. Uranium prices continued to trend sideways at their lows. So why did this happen? Well, this gets complicated. The simple answer is that while supply had fallen a lot, it was still higher than demand for a couple of discrete reasons, which I won't get into today. The industry tends to work on long-term contract pricing, and whilst many of these pre-Fukushima contracts are due to be renewed soon, the utilities were refusing to pay $40 per pound to the miners because there was still an abundance of uranium around the place that they could get for $25 in the spot market. Remember, supply greater than demand equals low prices. So what changed in March, and why did I say stay safe, keep calm, and buy uranium? Well, I was telling you to stay safe and keep calm because of COVID, and I was saying buy uranium, funnily enough, because of COVID. When COVID struck, Cameco curtailed the largest uranium mine in the world, Cigar Lake, out of health concerns for their workers. Conveniently enough, Cigar Lake has not come back, and I don't think that's a coincidence. My thesis is that COVID was just an excuse to bring the mine down. You see, these mines have very strict labour agreements, so firing workers is very difficult, but COVID provided the perfect opportunity to do so without retribution, and after all, they could just be concerned with their workers' health. With Cigar Lake down, Cameco now have the bargaining power to tell the utilities that if they want the supply to come back, they're going to need to pay $50, or it stays in the ground. The utilities may have no choice other than to pay that. Regardless of whether or not this was their plan, the removal of supply from Cigar Lake has now tipped the market into what we call a supply deficit, which means that demand is higher than supply, and hence prices should go up, as they have. Since that fateful day, uranium prices have risen rapidly, though we're yet to see the long-term price trend higher, as you can see in that gold line on the chart. This is for a couple of reasons, which I won't go into right now. Is there more to go? After all, uranium hasn't reached $40 or $50 yet. Well, that's a discussion for another day. If you did enjoy the video and would like to hear more about uranium, leave a like below and subscribe to my channel.